Based on the historical data and forecast, Bitcoin exhibits an overall upward trend. The price has consistently tested and rebounded from the support level of $95,600. The RSI values fluctuate between 60 and 70, indicating neither extreme overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential for a pullback or consolidation. Considering this, I recommend a strategy that combines RSI and Bollinger Band signals. Specifically, we will implement a buy strategy when the RSI dips below 65 and the price touches the lower Bollinger Band. Therefore, the entry price for this trade will be $94,000, coinciding with the lower Bollinger Band on May 8, 2025. The stop loss will be set at $93,000, just below the support level and the lower Bollinger Band to protect against a significant downward move. The initial target price will be $97,000, aligning with the forecast price and the upper Bollinger Band. If the price continues to rise, the second target price will be $99,000, based on the forecast for May 14, 2025. This strategy aims to capitalize on the upward trend while mitigating risk through strategic stop-loss placement. Based on the historical data and forecast, Ethereum shows a generally upward trend, bouncing around the support price of $17.90 and testing the resistance at $18.40. The RSI consistently remains between 53.7 and 58.4, indicating neither extreme oversold nor overbought conditions. The Bollinger Bands have been expanding, suggesting increasing volatility. Considering this, I propose a moderately bullish strategy. We will initiate a long position when the price touches the support level of $1,790. Set a stop-loss order at $1,770 to mitigate potential losses if the price breaks below support. Our initial target price will be the resistance level of $1,840, aiming for a quick profit. To refine this strategy, we will incorporate the Bollinger Bands. If the price approaches the lower band around $1,580, which is significantly below the current price, it might indicate a temporary oversold condition, presenting a buying opportunity. In this scenario, enter a long position at $1,580, set a stop-loss at $1,560, and target the upper band around $1,940. However, given the recent price action and the forecast, the primary strategy remains the initial long position at $1,790, with a stop-loss at $1,770 and a target of $1,840. This balanced approach combines trend following with opportunistic dips, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, XRP shows a slightly downward trend with support at $2.13 and resistance at $2.21. The RSI fluctuates between 45.9 and 60.8, indicating periods of both oversold and overbought conditions. The Bollinger Bands suggest increased volatility, with the price occasionally touching the upper band but generally staying within a relatively narrow range. Considering this, I propose a strategy combining RSI and Bollinger Bands. We will enter long positions when the RSI falls below 50 and the price touches the lower Bollinger Band. The entry price will be $2.11, with a stop-loss set at $2.09 to protect against potential losses. The target price will be $2.19, aiming to capture a moderate upward movement. To optimize the portfolio, we will implement a dynamic position sizing strategy. Initially, allocate 30% of the capital to this long position. If the price breaks through the resistance at $2.21, consider adding another 20% to the position with a revised target of $2.25. Conversely, if the RSI consistently stays below 40 for 2 consecutive days, reduce the position size by 50% to mitigate risk. This adaptive approach allows us to capitalize on favorable conditions while safeguarding against unfavorable ones, maximizing potential returns while minimizing downside risk. Based on the historical data and forecast, BNB shows a sideways trend with support at $599 and resistance at $618. The RSI fluctuates around 50, indicating neither overbought nor oversold conditions for the most part. The Bollinger Bands have been widening recently, suggesting increasing volatility. Considering the forecast for May 8, 2025, at $599, I recommend a long position with an entry price of $599. The stop loss should be set just below the support level at $597 to protect against a potential downside breakout. The initial target price can be set at the resistance level of $618, aiming for a profit of $19. To refine this strategy, I'll incorporate the RSI and Bollinger Band signals. If the price touches the bottom of the Bollinger Bands, consider a long entry. If the RSI falls below 30, which hasn't occurred in the recent history, it's another strong buy signal. If the RSI rises above 70, it's a sell signal. In our case, the RSI is currently around 50, so we will stick with the initial long strategy. If the price reaches $618, we can consider taking partial profits and moving the stop loss to break even. This combined approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Solana shows a slight upward trend with periods of consolidation. The RSI consistently remains between 53 and 65, suggesting neither strongly overbought nor oversold conditions. The Bollinger Bands indicate price fluctuations within a defined range. Considering this, I recommend a moderately bullish strategy. We will initiate a long position when the price touches the lower band of the Bollinger Bands, specifically at $135. The stop loss will be set just below the support level at $136 to mitigate potential downside risk. The initial target price will be the resistance level at $150, aiming for a quick profit. To refine the strategy, we'll incorporate RSI signals. If the price retraces to the lower Bollinger Band and the RSI falls below 55, we'll enter a long position at $135. The stop loss remains at $136. However, if the RSI dips below 30, indicating an oversold condition, we'll tighten the stop loss to $137 and adjust the target price to $152, anticipating a stronger rebound. If the price reaches the resistance level at $150, we'll consider taking partial profits and setting a trailing stop loss to capitalize on further upward momentum. This blended approach combines Bollinger Band breakouts with RSI confirmation for a balanced risk-reward profile. Based on the historical data and forecast, Dogecoin has been fluctuating within a defined range between $0.17 and $0.182. The RSI indicates that the asset is currently approaching oversold conditions, with values hovering around 48 to 50. The Bollinger Bands show that the price is near the lower band, suggesting a potential for a bounce. Considering these factors, I propose a moderately bullish strategy. We will initiate a long position at $0.171. A stop-loss order will be placed at $0.17 to mitigate potential losses if the price breaks down further. The initial target price will be set at $0.182, aligning with the resistance level. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI moves above 30, confirming an oversold condition, and the price touches the lower Bollinger Band, it strengthens our buy signal. If the price reaches $0.182, we'll move the stop loss to the middle Bollinger Band, around $0.173, to secure profits and reduce risk. If the price fails to reach $0.182 and shows signs of reversal, we will exit the position at $0.176 to minimize losses. This combined approach balances potential gains with risk management, aiming for high returns while protecting capital. Based on the historical data and forecast, Cardano demonstrates a downtrend with increasing volatility. The RSI consistently fluctuates around the 50 mark, indicating neither strong overbought nor oversold conditions. However, the recent dip towards $0.663, combined with the forecast prices hovering around $0.68, suggests a potential short-term downward movement. Therefore, I recommend a contrarian strategy focusing on shorting opportunities when the price touches the upper Bollinger Band. Specifically, when the price reaches $0.743, enter a short position. Set a stop loss at $0.748 to protect against unexpected upward spikes. Aim for a target price of $0.681, capitalizing on the predicted downward trend. To optimize the portfolio, I suggest a weighted average of the three strategies. Given the clear downtrend and the support level at $0.634, the shorting strategy based on the Bollinger Bands should have a weight of 60%. The RSI strategy should have a weight of 20%, focusing on entering long positions when the price dips below $0.662 and RSI falls below 30. The remaining 20% should be allocated to a conservative strategy, holding cash and waiting for a more definitive trend reversal. This diversified approach mitigates risk while maximizing potential returns by capitalizing on short-term fluctuations and the overall bearish sentiment. Based on the historical data and forecast, TRON exhibits a slight upward trend with price fluctuations within a defined range. The support price consistently remains at $0.246, while the resistance fluctuates around $0.252. The RSI values hover around 50, indicating neither overbought nor oversold conditions. The Bollinger Bands show that the price is occasionally touching the upper band, suggesting potential for a short-term upward movement. I propose a strategy combining RSI, Bollinger Bands, and support/resistance levels. First, I will wait for the price to fall to the support level of $0.246. Then, I will enter a long position at $0.246, setting a stop-loss order at $0.242 to limit potential losses. The target price will be set at $0.254, aligning with the upper Bollinger Band and a slight breach of the recent resistance. To refine the strategy, I will incorporate the RSI indicator. If the price retraces to $0.246 and the RSI falls below 30, confirming an oversold condition, I will enter a long position at $0.246. The stop loss will be placed at $0.242, and the target price will be $0.254. This strategy aims to capitalize on the anticipated upward trend while mitigating risk with a well-defined stop loss. The forecast data suggests a continued upward trajectory, further supporting the long position. The combination of technical indicators and support/resistance levels creates a robust and potentially high-return investment strategy for TRON. Based on the historical data and forecast, SUI demonstrates a clear upward trend, supported by consistently increasing Bollinger Bands and a recent bounce from the support price of $2.35. The RSI has been fluctuating above 60, indicating strengthening momentum, and the forecast prices predict further gains, reaching $3.81. Therefore, I recommend a long position strategy. We will enter a long position at $3.61, placing a stop-loss order at $3.27 to limit potential losses. The initial target price will be $3.81, aligning with the forecast price and capitalizing on the anticipated upward momentum. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 20, indicating an oversold condition, we will enter a long position at the prevailing price. Conversely, if the RSI exceeds 80, suggesting an overbought state, we will consider exiting the position or tightening the stop loss. Considering the current upward trend and the forecast, the most efficient portfolio will be primarily based on the long position strategy with a slight adjustment based on RSI signals. We will adjust the target price to $3.81 plus $0.1 if the RSI reaches 75. Based on the historical data and forecast, Chainlink shows a downtrend. The price has been consistently trading within a descending channel, with support at $13.6 and resistance at $14.3. The RSI consistently stays below 80, indicating that the asset is not overbought. The forecast for the next week predicts a continued decline, reaching $13.8. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential for further downside movement. Considering these factors, I recommend a short position strategy. The entry price for the short position should be $14.3, coinciding with the resistance level and the beginning of the forecast period. A stop loss should be set at $14.7, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly reverses. The initial target price is $13.8, aligning with the forecast price for the week. If the price breaks through the support level of $13.6, a second target price of $13.6 should be considered to capture additional gains. This strategy combines trend analysis, RSI signals, and Bollinger Band confirmation for a high probability trade. Based on the historical data and forecast, Celestia has shown a downtrend from April 24, 2025, to May 7, 2025, with a recent bounce. The RSI indicates oversold conditions, particularly between May 1, 2025, and May 7, 2025, fluctuating between 36.7 and 41.5, suggesting a potential reversal. The Bollinger Bands show that the price is approaching the lower band, indicating a possible buying opportunity. The forecast for May 8, 2025, to May 14, 2025, predicts a slight upward trend, with prices ranging from $2.39 to $2.41. Therefore, I recommend a long position with an entry price of $2.39, a stop loss at the support level of $2.28, and a target price of $2.45. To maximize returns, I propose a portfolio strategy combining RSI and Bollinger Bands. We will initiate a long position when the RSI falls below 40 and the price touches the lower Bollinger Band, which occurred on May 7, 2025, with an RSI of 36.7 and a price of $2.36. We'll enter at $2.39, set a stop loss at $2.28, and aim for a target price of $2.45. If the price hits the target, we will take profit. If the RSI rises above 60 or the price touches the upper Bollinger Band, we will re-evaluate the position. This combined approach balances risk and reward, leveraging both momentum and volatility indicators for optimal results. Based on the historical data and forecast, Berachain shows a clear downtrend. The RSI consistently remains below 50, with several days dipping below 30, indicating oversold conditions. The forecast for the next week predicts further decline, with prices expected to fall to 2.68, 2.65, 2.55, 2.39, 2.43, 2.43, and $2.32. The support price is consistently at $2.9, and the Bollinger Bands are narrowing, suggesting increasing volatility. I recommend a short position strategy. The entry price for this short position should be $2.95. Given the consistent support at $2.9, a stop loss should be placed slightly above this level at $3.03. The initial target price should be $2.55, aligning with the forecast price for May 12, 2025. If the price reaches $2.55, consider moving the stop loss to break even to protect profits. Further price declines could target $2.39, and if achieved, a second target price can be set. This strategy combines RSI signals, Bollinger Band analysis, and price forecasts to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Jito shows a downtrend with increasing volatility. The RSI consistently dips below 50, nearing oversold territory, particularly on May 7, 2025, closing at 37.3. The forecast for the next week projects a continued decline, with prices falling to $1.59. Considering this, I recommend a short position strategy. Enter a short position at $1.64, placing a stop-loss order at $1.57, just above the support level. Set a target price at $1.55, aligning with the forecast price and providing a buffer. This strategy leverages the anticipated downward trend and protects against potential reversals. To refine the strategy, incorporate Bollinger Bands analysis. The price consistently approaches the lower band, indicating potential for a bounce. However, the forecast suggests further decline. Therefore, a modified approach is to enter a short position at $1.59, aligning with the forecast. Place the stop-loss order at $1.57, and set a target price at $1.55. This strategy combines the RSI signal with the forecast, optimizing for high returns while mitigating risk. The combined strategy offers a balance between capitalizing on the predicted downward trend and safeguarding against unexpected price fluctuations. Based on the historical data and forecast, IOTA demonstrates a sideways trend with fluctuations around 0.20 to 0.22. The RSI indicates a neutral to slightly overbought condition, hovering around 60 to 75. The Bollinger Bands show that the price is currently near the upper band, suggesting a potential pullback. Considering these factors, I propose a strategy that combines RSI and Bollinger Bands to capitalize on potential short-term movements. My recommended strategy is to initiate a short position at $0.209 with a stop-loss set at $0.215. The target price for this short position is $0.197, aligning with the established support level. This strategy aims to profit from a potential retracement towards the support price as indicated by the Bollinger Bands and the RSI nearing overbought territory. If the price breaks above $0.215, the trade should be closed immediately to limit potential losses. If the price reaches $0.197, the position should be closed to secure profits. This approach balances risk and reward, capitalizing on short-term price movements while respecting established support and resistance levels. Based on the historical data and forecast, NEO shows a downtrend with significant volatility. The RSI consistently dips below 50, indicating weakening momentum, and recently fell below 40, suggesting oversold conditions. The forecast for the next week projects further decline, with prices ranging from $5.72 to $5.41. The support level at $5.61 has been tested multiple times, while the resistance at $6.44 has proven difficult to breach. Considering these factors, I recommend a short selling strategy with a focus on capitalizing on the downward trend. My strategy involves entering a short position at $5.72, coinciding with the start of the forecast period. Given the recent oversold conditions and the projected downtrend, a stop-loss should be placed slightly above the recent resistance, at $5.85, to protect against unexpected upward movements. The initial target price will be $5.43, aligning with the forecast price and a significant drop from the entry point. If the price reaches $5.43, we can consider adjusting the stop-loss to break even and setting a secondary target price at $5.39 to capture further potential gains. This portfolio combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Axelar exhibits a sideways trend with slight upward momentum. The RSI fluctuates between 48.0 and 63.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands show a narrowing range recently, suggesting potential volatility. Considering these factors, I recommend a strategy combining RSI and Bollinger Bands to capitalize on short-term price movements. We'll implement a long position when the RSI dips below 50 and the price touches the lower Bollinger Band, aiming to capture a bounce back towards the resistance level of $0.375. Specifically, let's initiate a long position at $0.354 when the RSI is below 50, and the price touches the lower Bollinger Band. Set a stop-loss at $0.344, which aligns with the established support level, to limit potential losses. The initial target price is $0.365, near the recent resistance, offering a quick profit. If the price continues to move upward, we can adjust the target price to $0.375, the next resistance level. This strategy combines the momentum signal from the RSI with the volatility indication from the Bollinger Bands, aiming for a high probability, short-term gain. Based on the historical data and forecast, Zcash exhibits a strong upward trend, consistently breaking through resistance levels. The RSI values have generally been above 50, indicating bullish momentum, with recent readings nearing overbought territory. The Bollinger Bands have been expanding, confirming the increasing volatility and upward price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $39.1, placing a stop-loss order at $37.4, just below the support price, to limit potential losses. The initial target price will be $43.9, aligning with the forecast price for May 14, 2025. To refine this strategy, we will implement a dynamic target price adjustment based on the RSI and Bollinger Bands. If the RSI reaches 80, we will consider taking partial profits and adjusting the stop loss to break even. If the price touches the upper Bollinger Band, we will also consider taking partial profits. The final target price will be $46.2, which is the resistance price. This approach combines trend following with technical indicators to maximize returns while managing risk effectively. The portfolio will prioritize this long strategy due to its high potential for returns in the current bullish market. Based on the historical data and forecast, STAX shows a clear upward trend, breaking through the resistance level of $0.874 and approaching the resistance level of $0.985. The RSI consistently above 50 indicates a bullish momentum, with recent values nearing overbought territory. The forecast for the next week projects continued price increases, further supporting a bullish strategy. We will implement a tiered entry strategy. Initially, we will enter a long position at $0.885, placing a stop-loss order at $0.874 to protect against potential downside risks. Our initial target price will be $0.92, aiming to capitalize on the immediate upward momentum. To further enhance returns, we will employ a trailing stop-loss strategy based on the Bollinger Bands. If the price touches the upper band, we will move the stop-loss to the center of the Bollinger Bands, currently around $0.786. If the price continues to rise, we will adjust the stop-loss again to the previous day's upper band. Our ultimate target price is $0.977, aligning with the latest forecast. This strategy combines RSI and Bollinger Bands to identify optimal entry and exit points, maximizing potential profits while mitigating risks. This portfolio offers a balance between capitalizing on the current trend and protecting against potential reversals. Based on the historical data and forecast, EOS shows a clear upward trend, especially with the recent surge to $0.831 and the forecasted prices exceeding $0.75. The RSI consistently fluctuating around 50 to 70 indicates a healthy momentum, avoiding extreme oversold or overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility and potential for price movement. I recommend a long position strategy. The entry price should be set at $0.758, coinciding with the initial forecast price. A stop-loss should be placed just below the bottom of the Bollinger Band, around $0.598, to protect against unexpected downturns. The target price should be set at the resistance level of $0.99, allowing for a substantial profit margin. To refine the strategy, we can incorporate the RSI. If the price dips and the RSI falls below 30, indicating an oversold condition, consider adding to the position at $0.669. The stop-loss for this additional investment should remain at $0.598. Conversely, if the price reaches the upper Bollinger Band and the RSI exceeds 75, indicating an overbought condition, consider taking partial profits at $0.773. This layered approach, combining trend analysis, volatility indicators, and momentum oscillators, will maximize potential returns while managing risk effectively. This portfolio will achieve high returns. Based on the historical data and forecast, KAITO shows a clear upward trend, particularly evident in the recent forecast prices. The RSI values have been fluctuating, but recently crossed above 50, indicating increasing buying momentum. The Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Given the support price of $1.32 and resistance price of $1.55, I recommend a long position strategy. Specifically, enter a long position at $1.1, placing a stop-loss order at $0.96 to mitigate potential losses. The initial target price should be $1.28, aligning with the forecast and the upper Bollinger Band. To maximize returns and manage risk, I propose a dynamic target price adjustment. Once the price reaches $1.28, move the stop-loss to break even at $1.1. Continue holding the position, adjusting the stop-loss daily to protect profits. If the price reaches $1.47, consider taking partial profits, securing a portion of the gains while maintaining a position for further upside. This combined strategy leverages the bullish trend, utilizes RSI and Bollinger Bands for confirmation, and incorporates risk management techniques for optimal results.